you from United Policyholders. I'm Carrie Waite. I'm the Colorado Coordinator and Recovery Coordinator for United Policyholders. And we're working alongside the Denver Urban Area Security Initiative in order to bring this information to you. I'm happy to see that we've got some people joined here, and I'm going to give a couple of minutes to allow anyone else to hop on if they're nearby. So I see we have a couple of folks. And a little bit of housekeeping to start with. Oops. This is a live webinar, and the best way for things to flow with the question and answers would be if you could please come into Q&A and type in your questions, and I will see them and I'll answer them as able during or just following the presentation. We have a lot of ground to cover here, good information for you. And should there be any questions that I don't have the answers for you, we will do research on that or ask our experts in the subject matter and send you a response by email following. Also, I wanted to let you know that while you may want to take notes, don't worry about taking notes too furiously, because we are going to send you a follow-up email with your registration email address that will include all of the relevant links to resources and the important information that we're sharing with you. So go ahead and take notes as you wish and ask questions as you wish, and some of the information will be coming to you in a follow-up probably tomorrow. So thank you for joining us. I am going to get started here. Okay. I want to give a special thank you to Erica Roberts of Jefferson County. Erica was awesome in that she had the vision to provide our Roadmap to Preparedness program through the Denver Urban Area Security Initiative via a grant. So we really appreciate that. She did the hard work to help make that happen. So thank you. All right, about United Policyholders, we are a voice and an information resource for insurance consumers in all 50 states for over 30 years. Whether it's about buying insurance, claims, legal matters surrounding insurance, we are subject matter expertise in that area. We use volunteers and incredible staff to do that. We're a small but mighty group, and we are supported financially by donors, grants, and volunteers. We never take money from the insurance industry or from the participants in our programs. We're a nonprofit. We are a trusted source for the media and a voice for consumers in the courts and legislatures and public forums. As you can probably see here, we have a picture. I hope you can see it. There's a picture here back from 2013, and this is me right here. I don't know if you, let's see if you can see my arrow. There, now it's visible. This, or it should be, this is me. And our executive director and a number of our volunteers from all of the fires that happened from 2010 to the flooding of 2013. We all joined together with a bunch of legislators and other consumer advocates to get some significant changes made for policyholders following disasters. And you are benefiting from that going forward should anything happen that you need to file a major loss claim. So that program following disasters is called Roadmap to Recovery, and we are getting ready to start Roadmap to Recovery webinar program for the fires that have just happened this year in northwestern Colorado, unfortunately. And then the roadmap to preparedness we are doing now with you. And then our advocacy in action is an example of that is the picture that we just showed you, and when we are friends of the court on many matters that impact you. Okay, so now I'm going to get into the meat of the presentation, and this has got to do with things like, well, basically the information, sorry, that we're presenting to you is what we have gleaned from all of these years of helping people following disaster claims. So we have turned that into preparedness teaching so that as a consumer of homeowners insurance, in this particular example, you have the ability to know what you'll need when you have a claim and to pick your insurance and to spend your insurance money wisely. So let's go ahead. I'm happy to see some more participants have jumped in. Let's go ahead and start. Insurance money, not charitable and government aid, are the #1 source of money that helps people rebuild and recover after a disaster. And thus, it is also the #1 resource that helps communities be resilient and recover quickly following a disaster. Government assistance, like you hear about FEMA coming in, they generally come in and take care of large infrastructure issues and things like that. And should there be a declared disaster by the president, like in the fire that my home was involved in 8 years ago, which was Waldo Canyon, which is how I got involved with United Policyholders. In that circumstance, they would have maximum grants, potentially up to $35,000 a household. But they're needs-based. You have to run through your insurance first. They take a while to get, and they certainly don't cover all of your belongings, much less rebuilding a home. Small Business Administration loans take time, and they have to be repaid. And charitable aid is awesome following a disaster because it fills in the gaps for things like food, clothing, emergency housing, basic needs, but not the cost of rebuilding. So it's your insurance that you're going to need to depend on as your safety net. We always say, be prepared, not scared. Knowing in advance what you need so that you can act if you have a claim brings a great amount of peace to people. So we really recommend that you contact your agent for an insurance checkup to go over your current policy that's in effect now, and if that is going to be sufficient to cover you to the extent you're expecting. And I'll go over that in more detail as we go on through the presentation. Inventory your assets and important documents. We're going to talk a lot about walking through your property outside and in with a video and taking photos and then storing that in a safe place in the cloud or offline so that you can easily recreate an inventory of what you had should you lose what you had. And then we have here, get a clue report. The clue report is basically like a credit report of your insurance history. So all of the insurers kind of come together, and LexisNexis is a company that gathers all of this information up, kind of like Equifax or something does for credit reports from the past 7 years. And they use this information to rate you. And what that means is to decide whether they want to insure you and what they want to charge you. So there can be sneaky things hidden there, and it's a good idea to get that and clean it up. And we're going to show you how you can do that. And then finally, taking steps to harden your home. And what that term means is ways that you can help make your home stronger and more resilient and resistant to damage should your home encounter high winds, hail, fire, things like that. There are a number of things and a number of government agencies. The fire department often will help and come do an evaluation for you. Um, Landscape mitigation companies can come and give you an idea of how to best clear a defensible space. So should there be a fire near you, especially if you live in an urban interface, I did live in an urban interface area in Mountain Shadows when the fire hit my community. Um, and um, yeah, and we just literally had a fire that I could see clearly from my newer home in Colorado Springs about a week ago. And we went walking there yesterday to take a peek at the damage, and somehow they managed to stop the fire from encroaching on homes, even though it literally burned right up to the fence line of a neighborhood. And the authorities that worked on that did a great job. And they're saying that so did the homeowners because there was defensible space. So that's an important piece that can help lower your insurance rates, and it can give you access to better insurance companies. And then installing fire retardant and impact resistant materials on home and property can make a big difference also in your rates and in the resiliency of your home. Okay, let's see. Any questions yet? No, you can always type it in the Q&A. So we also like to say the devil in dollars are in the details, and that everything in your insurance contract is fine print. Most of us do not read our entire insurance contract for obvious reasons. It's really dry, it's full of strange language and small print, and doesn't mean a lot to most people as they read it. So we're going to try to break it down for you and just highlight what's really important. One of the things is making sure you're getting the right kind and amount of insurance um, so that your insurance is doing what you expect it to do should you have a claim. And we'll go over that more in detail. The cost to replace your home following something like a total loss after a fire is very different from the cost to purchase your existing home as it sits on the resale market. So Zillow or Realtor.com or even the MLS that realtors use to give you a market analysis is a good starting point, but it is generally going to be quite a bit lower than the actual cost to rebuild that exact same home because of all of the forces that come into play following a disaster. Supply and demand issues, code upgrades that the city has enacted or your county since you last built your home all dramatically increase the cost of building. We are getting reports that housing values in Colorado have increased dramatically along the Front Range. I'm sure you guys all know that. That's got its silver linings and its not so silver linings. And replacement cost per square foot can be over $300 a square foot. It was less than 150 8 years ago. When Waldo hit. So things have really escalated. So if you have a 2,000 square foot house, you're talking about starting at 600,000 potentially. There are a lot of variables, but potentially to rebuild a home that has been lost during a disaster, following a disaster. And then another thing to be aware of is every company is different. Insurance provider is different. Every policy has different terms and languages, and the language matters. So we'll go over some of that. There are lots of problems with coverage following disasters. You may find that you didn't have enough insurance, even if your insurance company pays the full amount of the claim up to the limits of your policy. So that's why we focus so much on that. Or you may find that there are exclusions like business equipment that you weren't aware of. Business equipment has very limited coverage in a homeowner's policy. So if you are working from home, you're going to want to really take a closer look at that. And then there are claim problems. And these have to do with difficulty in communicating with your insurance company, difficulty getting reliable contractors out, things like that. And we handle the claim problems in the roadmap to recovery side and the coverage problems more in this side, in what we're doing today with you guys. And hopefully some of what we teach you today will help you avoid some of those claim problems. And some of those common post-disaster problems include, like I said, underinsurance. I'm going to show you some statistics on that. That the claim process can be very confusing and frustrating. I mean, they have a language of their own that you likely won't be familiar with. I learned very quickly following the fire in my community that whether you were a bank president, a neurosurgeon, you know, a student, even an insurance agent, you may not understand the way that the insurance company and the adjusters speak and the assumptions they make. In other words, their policies within the policy. And some of those things you can challenge, and some of them the courts are how you challenge those things. So again, understanding what you can up front is of great help. Fortunately, they do not usually teach Insurance 101 in high school or college, and so here we are. There can be multiple insurance adjusters. I literally cannot count the number of insurance adjusters I had following my partial loss claim, because there were, you know, like 380 totally downed houses. So we weren't getting much of the attention at that time. So this is why documenting everything is so important. If you have it documented, it doesn't matter if your insurance adjuster changes. You have evidence of what was represented to you. There could be payment and processing delays, overwhelming paperwork, and issues with anyone who might have a lien or an interest in the home. If the home is co-owned, if you have a mortgage, if you know, you have a contractor that isn't fully paid yet, those can cause some issues. Here's the survey information from Colorado that I wanted to bring to your attention. 57% of Black Forest Fire survey respondents from 2013, which was the most recent large fire in Colorado up until this year, had not yet settled their claim 1 year after the fire. I'm going to remind you of this for a very good reason as we get on down the road here a little bit, and you'll hear about that. Also, you'll see that in both the Black Forest fire and in the High Park and Woodland Heights fires in the northwestern part of town, of the state, they were near 50% all feeling they were uninsured. In other words, their policy did not provide enough resources to rebuild their home and indemnify them back to their pre-loss state, which is the intent of an indemnity insurance policy like a homeowner's insurance. Okay, now we are going to get into kind of the meat of things here. Let me just check my time. Okay. This is our beginning of looking at the declarations pages. When you get homeowners insurance, you are given really any kind of insurance. You are going to be given declarations pages and then a form. And the declarations pages are the pages that summarize the particulars for you and your policy. And every year when that time comes to renew the policy, You have the option to review your policy, and maybe you want to choose to change some things. And that's where that insurance checkup comes in. So keep in mind, you don't have to wait till that time to call your agent and talk about these things. You can do it anytime. If you have some time on your hands right now, now is the best time to do anything to do with preparation. Um, those forms, the policy form that is attached to the declarations pages, those also vary considerably company to company, and each company has multiple forms. So you want to make sure that you have a copy of your current policy downloaded somewhere off-site from your home where you can have access to it should you need it. Most policies have separate dollar limits for separate sort of buckets of coverage. And I'm going to go over those with you. Let's skip to the first example. So this is one example of a current 2020 declaration page one from one of the big carriers here in Colorado this year. And I'm going to put my glasses on here because it's all fine print. And I want to show you this number matters a lot. Let me turn on my little highlighter. This dwelling coverage A right here matters a lot because all of these other chunks and buckets of money are often a percentage of this dwelling amount. And the dwelling coverage A is generally going to cover the actual physical hard house itself and anything that is physically attached to the house. So that would be the foundation, the house, if you have light fixtures installed, your fixtures in your bathroom, any appliances that are built in, any built-ins, the carpet, things like that, the wood floors, those all come under that dwelling coverage A. So in this situation, that's $300,200. The second pot that they're showing here in this particular policy is called B, and it's other structures. Other structures are usually offered an amount of about 10% of the dwelling coverage. That's sort of the standard go-to. If you happen to live somewhere where you have a barn or you have a lot of, say, man-made built retaining walls or other things that would eat up that 10% quickly should there be a fire or something like that that would damage those things. This could be fencing. This could be a patio that's not attached to the house. It could be any number of things. It could be your septic tank. It could be a lot of different things. You may want to talk to your agent about bumping that number up, which you can do. It will increase your premium, but not by much. And what you want, the idea is, can I replace my home adequately with these number of dollars? Personal property. This is C, and I'm going to get into this in more detail in a minute. The main thing to remember about personal property coverage, or it's often called contents, is that it's usually offered at about 75% of the dwelling amount, but not always. If an agent is trying to be very competitive with the premium, they may bump that number down without really necessarily sharing with you that that's an uncommon thing to do. And most people really underestimate how much their stuff costs to replace. You want replacement value for stuff because thrift or garage or actual, it's called actual value coverage for personal property is not adequate. I mean, no one has time to go thrift shopping for every item they own to try to replace those things. So replacement value is very important, and I will keep talking about that. I wanted to show you here where there is limited home replacement cost endorsement here. And this particular policy is a replacement cost policy. So they are covering for replacement cost on this policy. And then the fourth significant area is loss of use. And this is D in this policy, and it's often called additional living expense. And the main thing I want to point out about this particular policy with this is that it is a dollar amount. You will see here, it's $120,100. And you may think, wow, that's a lot of money. Well, if it takes you, you're still going to have to pay your mortgage on your burn down or volcano, excuse me, unless you're in Hawaii, or maybe Oregon, that's probably not a problem. But your tornado ravaged home, it may take 2 years to get through your claims process and rebuild your home. It may even take longer. So it's really important that while you're still paying the mortgage on a house that doesn't exist, you're going to have to pay to live somewhere. And that's where loss of use comes in. And this can be either a dollar limit, like you see here, or it can be an unlimited amount of dollars, like you see here in this policy, coverage D, loss of use. But this is also combined with a 12-month limitation. So the way the policy would read is, we will pay you to live somewhere else that is of like kind and quality while you are, aggressively working your claim and rebuilding your home. But we will only do that for up to 12 months or less, whichever comes first. And 12 months is rarely sufficient. So it is possible to up that to 24 months. That's one of the things that we got guaranteed in our efforts in 2013, is that all insurance companies in Colorado must offer to up that to 24 months. And we strongly recommend that you do that. So then here, it's kind of strange because it's hidden in this language down here, but here's your deductible. This policy is an all perils dollar deductible. And what that means is whether it's hail, fire, theft, vandalism, any covered peril. It has to be a peril that's covered under the policy, but all those perils are treated the same. If it's a covered peril, it will have a $1,000 deductible. And that HO3 you see there is the type of form that your policy is if you have this particular policy. And there's all kinds of other additions and subtractions on here. And I'm going to go over that on the next slide because I think it's just a little clearer and easier to see. Okay, so here we go. I talked about the loss of use, but now let's talk about the other things that can come into play. When you compare insurance companies and insurance products like this policy, you have to ask a lot of questions because the agent won't necessarily offer the detailed nuances. Many people just take the amount that their mortgage company requires, and that's what they get, and they just go with it. And the message we're trying to send is, it is well worth your while and could make all the difference if you dig into the details and make some changes and make sure you know what you're getting. Okay, so in this particular situation, this is another current 2020 policy from another big insurer in Colorado. And this has a percentage deductible for wind and hail, and $1 deductible for all other covered perils. So the last policy didn't have a separate deductible for wind and hail, but this policy does. And you will see that right here. Wind and hail, $3,850, which is 1% of the dwelling protection. So I will get into a very clear example of that in the future during our presentation, but I just want you to know that if you have special deductibles like this in your policy, it means more money is going to need to come out of your pocket before your insurance starts paying. And then I also wanted to use this example to go over some of the types of discounts that are available to you. All insurers pretty much have auto and home combination discounts, or what they call multi-line or multi-product discounts. So in this example, the person has auto and home and they got an extra discount for that. Then they also have an umbrella liability policy and got an additional discount for that. There's some sort of additional discount here that I'm not familiar with. There can be loyalty discounts for the number of years you have done business with this insurance company. There can be claims-free discounts. There can be age of home discounts or additional premiums you pay depending on the age of your home and how they perceive that to affect risk and cost. And the same thing with roof age. They may well take that into account. And then if you do get those hardened resistant materials on your home, let's say you had a shake roof that was very fire unpopular for fire control. You know, embers can land on it and catch the house on fire. And now you've replaced your roof and you have an impact resistant roof that is class 4 and it's also fire retardant. Well, if you tell your insurer you've done that, then you will get a discount each year on your premium. So that's well worth mentioning when you do that insurance update checkup. Okay, so the important things to look at on your declarations pages for both homeowners and renters are to know your deductibles, dollar versus percentage or both, know the dollar time limit or both on your loss of use, be sure that you have the replacement cost over actual cash value on everything. I mean, I would literally ask that question. It is in our questions to ask your agent, which we'll be forwarding to you tomorrow. Scheduling valuables, I will go over that with you. Business property, things that aren't covered adequately with just the standard form. And then for homeowners, we talked about adequate dwelling coverage, and I'm going to talk about these other things next. Everything follows coverage A, as I had said. So you're really going to want to try to figure out what would be the actual cost per square foot to rebuild the same house. Not the dream house you want to rebuild instead, even though you could possibly do that following the loss of a home. Your insurer pays you for the loss. They pay you based on the square footage, the design, the updates, and everything of what was lost. So that's why documenting what you currently have is so, so important. We strongly suggest that you do an extended cost endorsement when you buy your policy, that you add that endorsement, and I'm going to show you more about that. And you can get some help with your estimate. We suggest you talk to your insurance agent and you tell them you're concerned about it, that you're aware that costs have gone up like crazy in the front range, and that you want to make sure you have enough insurance to replace your home. I asked my insurance company to give me a replacement value appraisal, and some will and some won't. You can buy it yourself. Just make sure it is an insurance replacement value appraisal. My insurance company that I was moving to did send out an appraiser to give me a value on our new home. newer home. You can ask local contractors and builders who have some experience in rebuilding, especially if they have experience in rebuilding following a loss. And they can give you some guidance to inform you. Um, Home replacement cost estimating software is widely available now in apps. Some of it's better than others. So take it with a grain of salt, but it can help inform you. And again, the real estate resale estimates are not great. Zillow, even the MLS that realtors use, they just really don't account for a rebuild. They account for the cost on the market as it sits now. So I encourage you to get as much information as you can together, and then insure to value. And remember, this does not include the land value. Insurance never covers the land. It may cover some landscaping, usually only 10% of the dwelling coverage A is covered for replacing things like trees and bushes and sprinkler lines. And some of those things overlap with other structures if you need them to. But the land itself, you will not be replacing, even if you choose to build somewhere else on a different lot. Your insurance company will not pay you for the land you're leaving. You will have to sell that land if you want to get reimbursed for it. Okay, the next thing I want to talk about is exclusions. And this is important because these are things that are just generally not covered in a homeowner's policy or may not be covered in your homeowner's policy. So you want to know what they are, and it's often possible to get endorsements added on that will help cover some of these things. In some cases, you actually will need to buy an entirely separate policy. So like for flood insurance or rising water, most of the standard insurers, State Farm, Allstate, AAA, USAA, American Family, you can name them. Think of any of the ones out there. They do not directly sell flood insurance. There are a few like Lloyd's of London, maybe another one or two that do. But most all of the flood insurance for residential homes comes through the National Flood Insurance Program from the government. And your insurer agent may be able to offer you information on that, or you can get it yourself. And if we have time, I'll go over that in some more detail for you as well. Generally speaking, fungi, rot or mold. Mold's a big thing, even in Colorado. I mean, you wouldn't think so because, Colorado is pretty dry, but black mold is a big deal. And often insurance companies will list that as a specific exclusion. However, there are certain circumstances where if you should have a mechanical failure in your plumbing, say your washing machine hose bursts when you're not home, and your home gets flooded and water goes into spaces that you didn't think it went into, and before it can be fully mitigated, mold develops. Well, water from a mechanical failure that causes damage is usually covered under a homeowner's insurance. It's different from flood. It's kind of considered falling water. It wouldn't cover the mechanical failure part. You would have to pay for that out of your own pocket, but it would cover most likely damage, at least up to a certain limit, damage to your sheetrock, your flooring, maybe other soft goods in your home. And it may also cover mitigations to either prevent mold or to get mold out of your home. So just be aware that timely filing, if you do have a water event, can be the difference in whether you're covered or not. And that's an important aspect to understand, the difference between flood and, which is rising water from an outside source, and falling water or mechanical failure water coming into your home. Same thing with pollution and contamination. Unless it's secondary, it's usually not covered. So it may be that in order to restore your home following partial damage from a fire, asbestos tiles need to be removed. They would have to mitigate for that contamination of asbestos when they pull the tile out. In that case, the coverage would probably kick in because it would be secondary to a covered peril, which would be fire or smoke damage. So there are nuances on these things. So never just take no for an answer the first time around. Get some more details and make sure you understand. Our website is a great resource for those kinds of things. We have Ask an Expert questions you can send us, and we're happy to work with you. Earthquake and earth movement does happen in Colorado, and it is worth considering getting coverage. It usually doesn't cost that much if it is offered here. And we have had many landslides and things like that in recent years along the Front Range. Wear and tear, vermin, or damage from house pets, chewing things up, none of those things are covered under a homeowner's insurance policy. They do not cover these things. It's just not in the policy. And damage caused intentionally by a resident is also not covered. If someone vandalizes your home who is not a resident, then that may well be covered. Okay, endorsements. This is where you can add endorsements to your policy to make sure you have the kind of coverage that suits you and that will help you make sure that if if the costs do go way up, you're covered. Or so let me dig into that a little bit here. There are over 100 possible endorsements. You will not need 100 endorsements, but these are the key ones you want to talk about, and we will cover these on our questions to ask your agent as well. I talked earlier about extended replacement costs. This is where you can get an endorsement. I have one for 150% of my dwelling coverage A. So if to build my house again after a fire, exactly as it stands, with the increased costs because of supply shortages, labor issues, COVID, anything, you name it, my policy will add another 50% on top of that. And that comes from this little extended replacement cost. Now, you have to spend it to get it, and you have to prove it. But man, that comes in handy. Let me tell you, I have seen many people who would have not been able to rebuild had they not had both this extended replacement cost and the building code, ordinance, and law coverage. These are kind of similar, but they're different. So extended replacement cost, it bumps up the amount, the bucket of money that's available to you if you need it due to increases in costs for the exact same home. Building code, ordinance, and law provides a bump up. It's usually around 20%, but you can increase that if your home is older, for the difference between what it would have cost to build your home when you built it. Maybe it was built in the 70s and they didn't require fireproof materials, and now they do, and Trex decking costs more than wood decking. Then this would kick in to cover that additional cost. And if it's required as a code or through your even through your covenants in your neighborhood, you must abide by those things to rebuild in order to get your permit satisfied. So you will need to spend that money, and that can kick in even with something as simple as a hail roof claim. Water sewer backup, I talked about that. It may already be in your policy, but it may just be like $1,000 or $10,000. They may already have a little amount in there, you want to bump all of these up if you need to. I do not know how anyone could deal with something like this for less than $30,000 to $50,000. Should there be a serious sewer backup into living space. Home business, again, you will see when I show you some of the sublimits, your home business coverage for things like computers, even if you have a contracting business and you keep your tools at home every night with you. If those tools are lost and you don't have a separate business policy covering those tools, you are going to be out of luck. So you want to talk to your agent about making sure that's covered. Scheduled items, I'm going to go over in a second here. We went over replacement cost value and excuse me, earthquake, and then we'll talk loss assessment here in a minute. Let's get on down the road here. Okay, so coverage C is for contents, or this is personal property. Personal property is basically anything that is not attached to the home. So when I told you if you picked your home up and turned it over and shook it out, whatever's attached or was attached to it is part of the dwelling coverage. For personal property and contents, it's what's left. It's what falls out. It's what belongs to you and doesn't stay with the home should you sell the home. For example, your maybe you have a gun collection, jewelry, stamp collection, your furniture, your lamps versus attached light fixtures. Attached light fixtures may be considered part of the dwelling, whereas a lamp would not be. So this covers a lot of things, let me tell you. You just can't imagine. I found out that and this is several years ago, so it's probably gone up, but literally things that are under $3 that you own probably amount to $30,000 to replace. And I believe it. I mean, it's just crazy. Every spoon, every sock, every chemical in your garage, every food item in your pantry, all of these things add up. So keep that in mind. Okay, so here are some typical sublimits. This means this is the most the insurer is willing to pay on a loss of money, banknotes, and coins. They always severely limit this because it's very hard to prove you had it. And it's easy to steal. Securities, accounts, deeds, stamps, these are other things that usually are limited. Jewelry, watches, fur, especially with theft. All of the things on this list are easily marketable or stolen, and that's why the insurance companies put limits on them. But you can schedule them. Your insurance agent should ask you, do you have any special collections, art, firearms, business property, jewelry, furs, anything like that means a lot to you or has a high dollar value. You may want to schedule that. You'll have to get an appraisal on it to prove its value, usually to schedule things. So that's a personal choice, but just be aware that that's how it works. And here's where we really drill in again to documenting the details. Even if you don't feel like you have time to create a fabulous spreadsheet of all your belongings, that's okay. Anything is better than nothing. We do have on our website a home inventory spreadsheet that's already put together that you could start with if you are the kind of person that likes to do that. If not, it's okay. What's really important is that either you or you get someone, a friend, a family friend, a relative, you could even ask your agent potentially to make a smartphone or tablet video for you as you walk around your exterior of your home, your garage, inside your house, open drawers, open closets, and you narrate your belongings. You might say, oh, I have pecan wood floors that I just put in last year. I got new windows 5 years ago, even though my house is 40 years old. Things like that. Then you store that in a safe place. You could put it in a safety deposit box, on a flash drive. You could store it in the cloud. You could send it, zip it, and send it to relatives for safekeeping in an email. And if you really feel you can't wrap your arms around doing that, then hire an inventory professional or someone to help you. It doesn't have to be fancy. It just has to be something that can help you demonstrate what you lost. Insurance companies do not ride in generally on a white horse with the full amount of your coverage to hand to you if your home burns down. Instead, in your duties and responsibilities within your policy, in pretty much all homeowners policies in Colorado, you will be required to give them documentation of the details about your home that made it worth what it was worth. They will just go to the assessor's website and look at the value and assume you had vinyl floors and assume you had this and that. So you're going to have to use something to demonstrate that your home was of more value and your belongings were too. And having a video or pictures is a huge help. So that's what I suggest you do. If you want to shop around and see what other insurance providers have to offer, there's a company called Yapacopia. Excuse me, I always say it wrong. Yapacopia. They're a benefit corp, and we have a link to them on our website also, or you'll get it here when I send you links. And this will help hook you up with independent insurance brokers who can give you quotes on different policies with the different endorsement options or exclusions that you may want to see. Okay, let's keep going. Does anybody have any questions right now that we can get out of the way? Not so much? Okay. All right, so when you sit down to do that insurance checkup with your adjuster, we strongly recommend that you take notes and you keep them off site. Will probably, in our current age, you would probably do it by maybe Zoom or FaceTime or just on the phone. That's great. Just take notes and send them back an email to document what your understanding is of what they said to you. And that email can be your proof that you wanted to be fully insured down the road should you need it. Be clear about communicating what your specific goals are. You might say, my personal property, I don't have that much, maybe we can reduce that a little bit, but if my house burns, I want to rebuild it exactly as it is, and I want to make sure I've got that extended replacement cost coverage. So that's the kind of conversation you might have. And if they don't answer your questions or respond to your email, follow-up email, follow up again and follow up again until you get all of your questions answered. And then for updating your safety net, let's see what time it is. Okay. Again, if you do updates, remodels, if you finish a basement, if you put in those resistant materials, you want to tell your agent about it so they can up the value of your home. And make sure, because materials matter, and make sure that if you do get things like this done, get your permits finalized so that the county can document your square footage, because if you don't, it will be very difficult to recover any payment from your insurance company as that being finished square footage. So make sure you get those permits finalized. If someone moves into your home, if you are participating in the shared economy or you work from home, maybe Airbnb or you sell eBay or HomeAway or you have someone come in from care.com. Those are all things you want to tell your agent. If you get married, separated, or divorced, is another thing you're going to want to tell your agent about. And there are certain dog breeds that insurers exclude from liability coverage. So if you are going to be, if you have a dog, you're going to be getting a dog, make sure that you're not losing out on your liability insurance, and that you mention that. The questions to ask your insurance agent, we're going to send you a list, so I'm not going to go over that again right now because we're running short on time. I'd like to ask you guys a question, and if you could respond to me in the Q&A, and let me know, are any of you living in a single family home, a townhome, or a condo that has a association that you pay dues? You can just put it in the question and say yes or no. Okay, there's somebody. No, okay. Then I may just skip over this part because this has to do with where there are gaps between your, oh, here's another one. Let's see. Not in an HOA. Okay, good. So if you ever are in an HOA, you just be aware that there's a gap between the insurance coverage that the HOA has and the insurance coverage that you have, and that there are endorsements you can get called loss assessment coverage to help cover for that. And so I'm going to just keep on moving through this to these more important examples that would potentially apply to you here in Colorado. Thank you for those responses. So I'm going to give you two examples. Have any of you had a previously a hail claim on your home? Let's see. No, doesn't look like it. Okay, cool. Well, I'm going to help you prepare for the event that you might. I'm going to show you what a hail claim might look like for your roof if you have two different types of policies. Okay, I hear that. I'm going to send you an answer probably later for that third question. Okay, so in this particular example, what we have is wind hail deductible of well, there's some different deductibles, but basically here, it's a fixed dollar deductible like the one example I showed you. So you would choose a deductible when you buy the policy, and that will be the same regardless of the peril, like in the first example. So let's pretend that you have roof damage from hail, and a couple of roofers come out and they look at your roof and they say, yeah, we need to replace the roof. It's going to be $30,000 to do that. It's definitely hail damaged. It's got lots of dings and maybe some missing pieces. And so you're going to want to file an insurance claim. Well, in this example, the policy is a $400,000 dwelling coverage A, all perils replacement value policy with a choice of deductibles. You can choose when you buy insurance from that company through that agent from different types of deductibles. And that will determine how much comes out of your pocket, what you pay first before the insurance company starts paying on that hail claim, right? And this is a pretty simple, straightforward policy. And this policy is an indemnity policy, which should return your roof to its pre-existing condition, whether the problems are cosmetic, matching, potentially, although that can get a little sticky, in Colorado because there aren't any regulations about it. But the language should delineate whether your policy covers you for cosmetic damage, and a fixed dollar standard policy in the past generally did. They're getting creative now. But in this example, if you had a $1,000 deductible and you had a $30,000 claim, you would cost you $1,000 and your insurer would pay $29,000. Now, what happens if you have a different type of policy? And all the big insurers may sell this type of policy to you. This one is called a special perils and hidden costs policy. And again, we're going to use a similar situation. We have a wind hail damage to the roof of $30,000. Who pays what? And I know that this gets a little complicated, but hang with me on this. You have dwelling coverage A, all perils replacement value policy, but there are certain little add-ons or detractions in the language in the policy, and it can be misleading. So this looks at face value a lot like the other one, but this one actually increases your deductible to 2%. So you may have a $1,000 deductible for fire, theft, different things. But if it's wind and hail, which is so common along the Front Range, your deductible becomes $8,000 because it is now 2% of that $400,000 dwelling. So before your insurer will pay any money, you're going to be paying $8,000 towards that roof. And hopefully your insurer would pay $22,000. Now, what if they add yet another one? So an actual cash value clause for the roof if depreciated. This is very common now. We're seeing it more commonly in Colorado because of all the hail losses, which have really bitten into the profits of the insurance industry. So you may have replacement cost on everything else, but have actual cash value for the roof itself. And if your roof is older, then that means that your roof could be depreciated down to maybe $10,000, like I have in this example here. In that case, your out of pocket is going to be $28,000 because the most they will pay is the actual cash value on the roof, which is 10, but only after you pay that $8,000. So all the insurance company would pay is $2,000 on that claim. And then the triple fall here is if they also have an exclusion for cosmetic damages from wind and hail. Again, we didn't used to see this, but it's becoming more common. So your insurer might come out and look at your roof and say, you know what? Yes, your roof is damaged, but it's just cosmetic. The roof works. It's keeping water out of your home. It is providing insulation value, and we do not cover for cosmetic damages. It may look bad. It may have a few chunks off of it. We'll replace the missing chunks, perhaps, if it's over the $8,000 deductible, but we will not cover for cosmetic damages. In that scenario, it would all be on you. So you can see where you would end up spending $30,000 to replace your roof. And that can be just, a bit of a nightmare, honestly. You can push back, but if the language is pretty clear in the policy, it may be a losing battle. But it's possible to get policies. I just got a new policy for my home that doesn't have any of that monkey business. And I actually saved money. Sometimes when you shop around, you just want to make sure that you get a good quality company that's well rated, and you can find that out in a couple of different ways. I'm going to skip over the flood insurance, although we have plenty of information on that on our website. And also, I will send you links like to floodsmart.gov, where you can go on a map and find out what your risk is. And you should also find out whether your mortgage company is requiring you to have flood insurance or not. If so, be absolutely certain you don't let it lapse in these difficult times. You want to try to go ahead and get that paid and make sure you're keeping your due diligence on your flood insurance. If it falls off, it may cost you much, much more to put it back on. These are the details on how to review that clue report that I spoke of. You can call this phone number, 1-800-456-6004, or go online and fill out the report asking for your free copies, and then look them over closely and make sure you don't have any funny business on that report that's costing you money on your insurance. The Colorado Division of Insurance has consumer resources and links. They have something called a premium comparison tool for homeowners insurance. It won't really give you the exact premium amount, but it'll give you an idea of a bunch of different companies that offer insurance, what their ratings are, and they have click on links that you can use to get quotes if you want to compare. They have an excellent buyer's guide to homeowners insurance that we participated in creating with the National Association of Insurance Commissioners. You can ask a question or make a complaint. And they have some special considerations that they have asked insurers to do for people because of COVID. It may be granting you a little grace time on paying your premiums. It may be that they can kick back some premium money to you if you're not driving your car as much. And things like that. I also strongly encourage you, if you're in the middle of an insurance complaint or your insurer is not responding, hop on their website, click on that link and complain, because they will ask the insurance company to respond to you and it will get their attention. It will not be a mark against you with your insurer. If anything, it will just help them to kind of kick into action to serve you. So we kind of went over those tips to reduce premiums, and we're running out of time. So my question is, we're at an hour and 7 minutes. So I'm going to kind of tie it up here. But again, all of these resources are available to you online. And we really appreciate you taking the time, a community that is prepared, is resilient, and that helps everyone. So it's really awesome. Thank you so much. I really appreciate it. Marion and Patrick, for sticking through the whole thing with me. Do you have any questions I can answer for you? No new questions? Okay, awesome. We'll be looking on your email for some more information. And also you can hop in on, oh, I'm glad it was super helpful. Yay, thank you for the feedback. Sometimes I feel like I'm talking to the air on these Zoom presentations. It's, you know, it's a little mind-boggling, but really the information is there, and the resources that we will provide you will help you ask all the right questions and get this all tucked in. So again, thank you so much. Please let us know what you think of the presentation. And if there's anything else you need or any questions you have about insurance, hop on this www.uphelp.org and kind of fish around, and you'll find lots of valuable resources there. Let's see. Thank you, Marion. Okay, you guys have a great night. I'll let you go so you can go to dinner. Good night.